morning, everybody. How's everyone doing? How is everybody doing out there? Brand new start of a trading week. We've got Monday, May 22nd, 8:15 on the clock. I'm fired up. It's brand new trading week. It was a great weekend. Got lots of things done. And we're ready to come back to the screens, hit it hard, and basically see whether or not this breakout wants to stick or if it's just all a fugazi and we're going to be coming back into range. So that'll be the main point of kind of some of the evidence and data points that we look at in this morning stream, as well as streams moving forward throughout the week. Is the market going to see continuation from this move is the big key question, right? That's the $1 million question that everybody wants answered. So we'll take a look at that, of course. All right. So who's here with us this morning? Scrolling on up to the top, we've got Michael Cobble, we've got John Cardozo, Davey Day Trader, we've got Genius Monkey, David Ball, nice to see you. Victor Y, the BMW's in the chat. That's Buckminster Wallace, of course. Starlight's here. Ketchup Kings. Paul, nice to see you. Hopefully you got my comment on the on that other video. I'll never reach out first in any fashion. I'll never reach out over comments first. I'll never reach out over Discord. What else is there? Twitter, Instagram. I'll never reach out to anybody first, and I certainly will never ever offer to trade your money for you. I'm not in the business of taking investor money, so to speak, and trading it on your behalf. That is not at all what I am, number one, licensed to do, and number two, I have no interest in trying to grow someone else's money, but more importantly, no interest in losing someone's money. That would tear me apart inside. So I will never do that. That is not a service that we offer. There's just basically think about it like this. If you're trying to interact with Trade Brigade, it's either going to be through the YouTube channel, as in I posted a video, or you can go to the website, the official tradebrigade.co website, and that's it. Anything outside of those two avenues, probably not legit. Okay? And that's not specific to Paul. That's just for the chat in general. That's it's an unfortunate world, the finance world online. But anyways, hopefully nobody gets hurt by any scammers here. So anyhow, continuing along here, we've got Mickey, Crypto Commando, Katie Baby, nice to see you. We've got Chow Man, good morning. INF the Based Homie, of course. How could we forget? The Lobos is in the building. We've got Chris, Jeep for Life, 8Man, Profit Fuel, John Hills, Cipriano, Sammy Sams, Gregory Rulo. Thank you so much, sir. Re-upping the membership for 12 months. Good morning. Nice to have you in the chat. Who else is here? Siege, Quest of Quests, Rebecca F., our local healer, as INF used to say. John Smith, good morning. Good morning. All right, cool. Let's get started here with our economic calendar. Good morning, everybody. Thank you for tuning into the stream. Let's get going, though, with the analysis, with the breakdown. Today is Monday, May 22nd, and there's nothing on the calendar for today's session, so no big concerns from a fundamental perspective today. As we move into tomorrow's session, 9:45 a.m., we will be getting, so about 15 minutes after the markets open, right? Flash services and manufacturing PMI numbers, that's Purchasing Managers Index, just to gauge how things are going on the buy side. Think about it like the people who buy things at the retail stores, the purchasers at Target, the buyers of Walmart, those types of people go through and there's a report and we basically get some sort of read from this index. So above 50 represents expansion, below 50 represents contraction. Typically, that's how that one works. And right now it's coming in basically neutral. This is very, very neutral here, 50 and 52.6. So nothing crazy out of the PMI. In terms of later on in the week, we will be getting Yellen speaking. That's Wednesday at 10:05. Again, why not 10 o'clock on the dot? I have no idea, but 10:05, Yellen will be speaking. I suppose, if anything, it just means we can send internals in the Discord one click sooner than she gets on the mic. But 2 p.m. FOMC meeting minutes. 8:30 on the Thursday session, GDP and unemployment claims. That should be interesting. Then the big one, the Mac Daddy of them all, is going to be on Friday. We're going to get core PCE. That is, of course, the Fed's favorite measure of inflation, coming out at 8:30. We'll be live on the channel together to sort of catch the market's reaction, see what's going on there. But I would say that this is primarily where your fireworks are going to be. If I had to rank order a second one, it's probably going to be either I would have to say that the uncertainty around what Yellen will say, especially with the debt ceiling talks right now, this to me may be more of a firework event than the actual FOMC meeting minutes being released, right? So I would keep your wits about you on Wednesday at 10:05 a.m. All right, so that jam-packed calendar this week. Lots and lots of things that potentially could be market moving. All right, so with that said, we'll move along into some stock-specific headlines this morning. What else is going on here? So top-line figures are a bit mixed with the Dow up. S&Ps are up. NASDAQ is down slightly, just a hair. I mean, 2.5 points on a nearly 14,000-point product. It's basically flat, right? Let's be honest with ourselves. This is flat. This is not red. Oil is green, and the 10-year is mildly off as well. Nothing crazy there. That's down, what? Oh, 2/1000ths of a point, right? So anyways, let's continue along here and see what's going on with the big headlines. Stock futures are flat as Wall Street focuses on the tense debt ceiling negotiations. I wouldn't say that headline's too far off. I think it's reasonable for the morning. What else is going on here? JP Morgan Chase raises key revenue target to $84 billion after the First Republic takeover. Interesting. They ingest the bank, and now they're looking for revenue to expand. We shall see. Meta fined a record of $1.3 billion. 1.3 with a B. That's not just $1 million fine here and there. That's with a B. 1.3 billion over the European user data transfers into the U.S. So you got to be careful with what you're doing if you're moving data back and forth, database here, database there. International travel of data, I suppose it's going to cost you. It's going to cost you. So I don't know if anybody in the chat is moving their databases from foreign soil to domestic soil, but be careful if you do. You don't want to be fined with a 1.3 billion. Ouch. We'll take a look at that stock, obviously, as we move through the analysis here this morning. What else is going on? Nike is to trade lower following Foot Locker's dismal results. What a descriptive word there. Thank you, Citi, for the downgrade. What else is going on here? Wise, so a fintech firm called Wise, shares fall after announcing CFO is resigning, CEO to go on leave. I don't know if you guys remember, but I remember this clear as day because I was like, what the hell? I've never heard of Wise before. Where is this company coming from? There was a headline on the CNBC page here. Oh, I don't know. What was it? Maybe you folks remember as well. Could it have been a month or two ago? So earlier on in the year. And they're like, this new fintech is making a splash and, basically saying good things about the company. It's like, whoa. We've never heard of this thing. And now you see headlines like this and you have to think to yourself like, okay, what's really going on here, right? So not to say that it's a complete fugazi, but usually those headlines are not too friendly. Anyways, what else is going on here? Stock-specific stuff. Ford trying to get their foot in the door in the Wall Street arena, at least, for the EV plans and say, hey, guys, this is a good business model, not a bad one. What else is going on here? Wow, $600K for Kurt Cobain's smashed Fender. If you guys can tell me in the chat, here is a trivia question. What type of Fender guitar did Kurt Cobain play? What type of Fender guitar? What was the model? All right, if you guys can let me know in the chat. And don't look it up. I know if you're cheating or not, all right? So let me know. I'm not even going to give options because there's really, there's the big two, and then there's some eclectic Fenders out there that not everybody knows about. So let us know. Yeah, for the most part, you guys will probably choose between the Telecaster and the Stratocaster, but there are a lot of other Fender guitars out there. So just take a moment, think about that one, and we'll revisit that in a second. What else is going on here? What else? Stock-specific stuff. Streaming. Streaming's kind of in an interesting place right now. Netflix, Disney, Hulu, HBO, all that stuff. It's looking to a soft ad market for help, meaning like, hey, can we just fire up a ton of ads at cheap cost and drive new people to our platform? That's kind of what's going on there. Netflix, though, the stock, what a squeeze on Thursday. We'll get to that as well in just a moment. What else is going on here? The AI debate sounds like a foreign language, apparently. There's Sam Altman from OpenAI testifying in front of Congress saying, please regulate this stuff. $500,000 in Bitcoin hidden from the wife during a divorce, busted by a crypto hunter. Not sure how that one resolves in court, but anyways, moving along. Loop Capital sees Apple missing revenues this quarter. So a downgrade to Apple from Loop, that's going to be a big one. Apple does not oftentimes get a downgrade. All right. What else? I think that's it. All right. So we'll let the guitar question simmer for just a little bit longer, and then we'll revisit it before we jump on into our stocks, so to speak. So anyways, here's the earnings calendar. Zoom after the close today. Lowe's, Dick's, and BJ's before the open tomorrow. Again, BJ's is probably going to be a good harbinger. For Costco, which is over there Thursday after the close. Retail spending in bulk, right? Lowe's will be interesting as well. Materials, inflation, right? That'll be an interesting one. Dick's, not so much. I mean, if I think to myself, I'm like, how many people really go shop at Dick's all the time? Maybe I'm wrong here, but you can only buy so many baseball gloves for your kids. I suppose as we get into the golfing arena, people may spend more money there in the golfing arena. And maybe I just don't know anything about Dick's and sporting goods in the current state of affairs. But when I was a kid, what was it like? You got one baseball glove when you played t-ball up until whatever, and then when you move into high school, for me, I'm like, okay, enough baseball, going to play lacrosse. You buy the pads once, and maybe you need a new shaft and head for each new season, depending on how aggressive of a player you are. That's only a couple $100. I don't know. Dick's, we'll let it be, I suppose. After the close, Wednesday, this is where the fireworks will start going off. You've got NVIDIA and Snowflake. Snowflake will just be an interesting sort of, proxy for some other tech companies, but NVIDIA is the big one, obviously. Dollar Tree to see if we're turning this into a true recession, and Costco. Costco, once again, closely tied here. Anyways, that's what we've got for our earnings calendar. And let's move on over, to our stocks. Okay, here we go. So I'm just bringing up the YouTube chat, and we want to look at what type of guitar was being played. Okay, I see a lot of guesses for the very classic Stratocaster. That is a pretty decent guess. I see a lot of guesses for the Telecaster, and then I also see some pretty decent guesses outside the scope of what I would classically say is, a well-known guitar. A couple of Jazz Masters in there. Yeah. What else? A Jaguar? Mustang? Yep. Anyways, I do believe it was, at least the guitar in question was in fact a Strat. I believe it was a Strat. Yes, Crypto Commando, Harbinger. Yeah. Do I only buy one pair of shoes my whole life? No, I don't. I buy multiple pairs of shoes. I try to walk through my pair of shoes before I get a new pair. Maybe I'm just frugal in that sense, but I don't have a big shoe collection. I'm not a huge fan of shoes. Just rather spend my money on other things. Anyways, the fact that Dick's is still in business suggests that people are buying. Yeah, I mean, it's true. It is absolutely true. Anyways, let's get off the topic of earnings calendars and let's get on to the topic of the charts in front of us. What's going on here with the ES? I mean, big stuff took place last week. We were talking about it as it was unfolding. There's the Wednesday break that we kind of missed, or at least I kind of missed. There's the Thursday and then Friday pullback. And all things considered on the 4-hour chart, I mean, we've kind of got to give credit where credit is due. I always like to say this, right? Lows, higher lows. This technically could have acted as a higher low, but we're certainly trying to look for some kind of higher low up here. And we've just produced a brand new higher high on the 4-hour time frame chart. So all things considered, I don't think it's fair to say that we are any longer in a neutral trend. We are starting to build a new 4-hour uptrend, which of course is bullish. And we're just coming off of a brand new higher high. Can the 4-hour chart pull back and find a higher low? The answer to that question is yes. In a picture-perfect world, it's just above this prior high, aka we open here and stay above roughly 4,200. We'll get more granular in just a moment. Kurt played a Jaguar, I believe. Yeah, but wasn't the guitar in question from the auction a Stratocaster? I want to get this right because I don't want to be talking sideways about Kurt's guitar. This is for Shanks a Million. I believe the guitar in question, was it not a Strat? The one with all the writing, the black Strat? Maybe I'm wrong, but I was fairly certain that was a Strat, no? If someone can find a picture and drop a link in the chat, I would appreciate that. Again, I do not want to talk sideways about Kurt's guitar here. I was fairly certain that that one was a strat. Anyhow, we will let that one be resolved by Shanks a Million. So thank you. The auction was a strat. Yes, that's what I thought. But, again, there's no sense in talking sideways about Kurt's guitar. So anyhow, glad we've cleared that one up. Thank you for Shanks a Million for clarifying that he was playing a Jaguar, although the auction was a strat. Okay, now that we've cleared that up, let's get back to the price action at hand. Another thing that I said I was going to do for the stream is this, but I just want to, is this too much? Is this too much if I do something like this? I personally am a huge fan of the logo up there in the top left. It just feels right to me. But if it's too much green on the screen, if it's too distracting from the price action, we'll remove it. All good, Shanks a Million, all good. So you folks can let me know in the chat what you think of the graphic in the top left versus the bottom graphic, but I'm a fan. Anyways, back to the price action. Let's truly get down to business. We've got 8:30 on the clock. Let's make the most of the remaining 50-ish minutes of the stream. So here we go. It's all good. I'm getting mixed reactions in the chat, but we're just moving along. We're going to leave it for today's stream, and I'll look at the playback and see what I think. But anyways, back to the 4-hour price action. I'm going to focus my attention on the price action going forward here. We're going to get down to business. We just talked about higher highs. We just talked about higher lows. We know that a pullback on the 4-hour time frame chart can technically afford to find a higher low above the 4160 zone, and we are still technically in an uptrend searching for that higher low right around in this area. Okay, so 4-hour chart is complete. We know we're in an uptrend. We know we just produced a higher high. We know we can pull back and afford a higher low, and the key level to watch would be 4160 on a deeper pullback. Let's continue along to an hourly time frame chart. What's going on with the hourly over here? They're a bit redundant. I know I said I wasn't going to talk about it, but it's a bit redundant having both of these things, so I'll probably try to adjust in perhaps tomorrow's stream. Anyways, continuing along to the hourly time frame chart on the ES, you'll notice that once again we are in an uptrend here, breaking from this balance area with lows, technically speaking, higher lows, and higher lows on the Friday session, and along the way we've got highs, higher highs, and certainly even a higher high produced on the gap up from the Friday session. So once again, hourly time frame chart firmly in a new uptrend. I would say that this one cannot really afford too much to look for a low underneath the prior low of day. So Friday's low is kind of a key holding area for the hourly time frame chart. Just note that if we start falling underneath that, the threat, of course, on the hourly, we're not talking about the 4-hour anymore, but the hourly time frame chart threat is a lower high underneath, then pushes us into that 4160, and that's where it makes sense on the 4-hour time frame chart to look for that higher low. Okay, so on the hourly chart, we're starting to build a little bit of a plan for today's session, right? And that plan is really going to revolve around this area right here, 4,200 and Friday's low of day. All right, so that's kind of the main focus from at least this perspective. And as we get lower through the time frames, it'll still be the main focus. 4,200 is that key zone. We'll talk about the equivalent on the SPY, of course, as we move through today's analysis. But let's move to a 15-minute chart and ask ourselves the 3 questions that we're always concerned with to determine what the likely outcomes are for the morning session. So question number 1, where are we opening in relationship to the previous day's range? I'm just realizing I should adjust this a little bit more, so like this. There we go. So once again, question 1, where are we opening in relationship to the prior day's range? Here's the high, here is the low. One thing I do want to remind you of before we get too deep into the analysis is that we do have a very poor high from the Friday session. This poor high just, represents that buyers got stuffed at the top and then we back off from it. But in theory, when and if we retest 42.25, let's round up there, call it 42.26. Of course, there's no 0.9s on the ES. So 42.26, if revisited, should break in theory. It is a poor high. So carry that one forward. But of course, we're just opening smack in the midpoint of the previous day's range. All right, so this is a very neutral indication out of question number 1 right out of the gates. Whenever we have a neutral indication like that, we always move along to question 1.5, which is where are we opening in relationship to the value area. Here is value area high. Here is value area low. We're currently opening also centered within the value area, so that as well is an extremely neutral and balanced indication. Nothing about this open in relationship to the Friday range is overly indicative of shock and awe on the open, of sharp movement on the open. Whenever we get balanced indications for the first 1.5 questions here, we always know that P for patience should be paramount on the open. We're being very patient. We're waiting for an opening range to resolve, and then we're looking for some structure to build out that we can trade against. If you start getting active in the midpoint of the previous day's range, again, where do you start putting a stop loss? Where are you trading to? What are your targets? It's just not so clear when you're literally in the midpoint, the most balanced point of the prior day's range. And perhaps I shouldn't call it the most balanced point, because you can see that if it was the most balanced, it would probably be in the center of this area. So one thing to carry forward here, at least as perhaps something that will give you an indication sooner rather than later. Once again, P for patience is still paramount on this open, but just note that we do have a string of single prints above us in the ES for this open. The single prints are right here and produced a double distribution for the Friday session. This is distribution 1 up at the highs, and this is distribution 2 down here at the lows. You can see that we're currently opening in the lower distribution. That's this box right here. And if we break the overnight high, perhaps there is a rotation through the single prints to test value area high, which as well is the bottom of the overhead distribution here, D1, as we just called it. So we're not going to go to the market profile just yet, but we will in a moment, so I can show you what I'm talking about from a very visual perspective. So question 1 and 1.5 tell us patience, but the only indication I can see based on the previous range is trading through these singles to test value area high. Let's continue along through the pre-market questions, what we have to ask ourselves. Question number 2, where are we opening in relationship to the overnight range? Here's the overnight low that was made as we open up Sunday night at 6-ish, right? And of course, that's when all the panic is going on about the debt ceiling not being resolved, big crisis, all that stuff. I'm not saying that it's not a big deal, but certainly the market has shaken it off and says, in the market's eyes, it's not really a big deal. We're back in the Friday range, and of course, we're above 4,200. So overnight low, overnight high needs to be adjusted. I completely understand that. I'll do that in just a moment. We're opening basically smack on the overnight high, which is a more bullish than bearish indication, but it also gives us decent risk reward for a possible fade on the open. Once again, this is not really in play when we have P for patience indications out of 1 and 1.5. The only thing that I could kind of see here as being valid, and we'll talk about this as a scenario in just a moment, is a quick look into the single prints that fails up against the overnight high. Then we look for a short rotation through this sort of range back here, down into the lows, right? So we'll talk about that in just a moment and why that would make sense in my estimation. But last but not least, before we move along, question number 3, what's the overnight inventory position? Is it net long or net short? To do that, you just extrapolate the selling price. And we would say that that's the same thing as saying the close, right? How much time below, how much time above. You'll notice that it's fairly split, at least in terms of distance. Notice that there is your short side activity, and here's your long side activity. Duration-wise, obviously we spent more time above the prior day's settlement price. So I'd say we're probably slightly net long, but not by a huge margin. Obviously, this, was just a straight up rotation. There was really no downdraft to get us there in the first place. So I would say, although, again, 50-50 split distance-wise above and below, we're probably still something like 70-ish% net long, perhaps even better than that, 75. If I'm going to give the buyers the benefit of the doubt, 75% net long on the open. Again, not really all that meaningful when we're still dealing with a P for patience indication out of 1 and 1.5. But that's the gist of what's going on here. I think for the most part, the most responsible way to interpret the answers of these 3 questions is P for patience on the open, wait for an opening range, and see how the bottom of single prints start to resolve. All right, that's what I would watch here for. So what do I mean by that? Take a quick mental snapshot of everything that we've just talked about. I'm going to clean that up in 3, 2, 1. And here we go, right? If we adjust our overnight high to here, and we take a look at what single prints are technically in play, that's this area right here. That's, if you were to look at this chart on a 30-minute time frame, let's just do that together because sometimes it's fun to do. Here we go, 30-minute chart. if I zoom in, just notice that there is a bar that moves straight through here with no overlap, right? There's no overlap on the 30-minute time frame chart of this bar, so therefore we can conclude that there are single prints there, SP for single prints, which represent thin structure. So breaking over the overnight high here after an opening range looks pretty interesting to rotate through the single prints and tag the value area high. What is that trade distance? It's about 5 points, 42.10. Let's just round off here, 42.10, 42.15. So that's a trade worth watching out for out of an opening range. Again, we do have to be patient on the open because of the location of the open. But if we can go opening range, break the top, which is confluence of resistance with overnight high, as well as the start of single prints, that to me is a pretty clean trade setup to be watching for into the value area high. So that's number one, first and foremost. Now, as I was saying, if you notice that the market tries to do something that, resembles that trade, but really struggles here in the single prints and then falls back down underneath the overnight high or whatever the opening range high was from back over here. If you see this after a partial closing of the single prints, what does that tell you? Again, in theory, this is extremely thin structure. There's not a lot of volume. I'll show you that on the market profile in just a second. So if we can't rotate through that, then I would have to imagine that the buyers are not really all that confident in an upside move. Therefore, it will be difficult to see a continuation move in the upward direction, and therefore, it may perhaps make sense to look for short ideas, right? So you could start to think of this as a failed breakout. Move back down into the range is always more powerful through the bottom of the range with trapped longs here, close out with a stop underneath low of day, and now all of a sudden, you're looking for that rotation through this distribution at the bottom, right? And you would just start to target value area low. 4,200 would become a valid target. You could look at prior low of day, 4190s, right? This general area is certainly going to be a area of massive interest, just massive interest on the downside. Okay, and we know why, because on the hourly chart, right, we just discussed how this kind of has to hold as the low on the hourly chart specifically if we are to remain in an uptrend. On the 4-hour chart, we know that there's more room to break down, and it's not the end of the world, but on the hourly chart, right, this is kind of starting to become a line in the sand, prior low of day, kind of a line in the sand. So that's the open, and that's the interaction that I would really be focusing on around the overnight high. So once again, opening range here, an attempt at a break. Things will happen around the overnight high. Things will happen centered around these single prints. Another reasonable trade idea to look for is, sure, we could get the bullish break and get that 5-point rotation to here, value area high. But if we start to reject there, that's also a valid place to be looking for some resistance at the bottom of this overhead supply. All right, so that's another reasonable trade idea, except on this short, you're just looking for a retracement to the top of the range here, because the threat, of course, is that this happens, and now we're dealing with a new uptrend, right? Let me draw that in a little bit more cleanly. So here we go. Boom, breakout, pullback, respects the top of the breakout range, right? And then you get a higher low here. So that is certainly an opportunity. Just you can kind of see how these trades unfold off of these key structure points. And it's not just because it's the overnight high. It's not just because it's the value area high. It's more importantly centered around the single prints and what separates distribution 1 and distribution 2 down below at the bottom. So hopefully this 30-minute candlestick visual was enough to reinforce this idea. But what we're going to do is move on over to our good friend, the market profile. And I just want to show you what this looks like on the ES market profile. So here we go. This is the market profile, and if you'll notice, this D period is the equivalent of the 30-minute bar that just moved straight in the downward direction. You'll notice that your overnight high is right here. That's the top of this, darker gray shaded. It appears more faint, right? Darker gray shaded profile. That's the overnight range. Overnight high is right there. If we break through it, once again, where's your target? Right here, value area high, as well as the beginning of distribution 1 overhead. I would also reinforce the idea that we have a poor high up here at the top. When and if it is retested, we should expect that to break. We should expect it to break. It's also a pretty mechanical area right at the top of the, Thursday into Friday overnight session, right? So anyhow, that is the market profile. That's always, in my estimation, a good way of seeing this, right? Because you can also see the volume difference. Notice the volume out here, and I suppose the best way to illustrate this one is just to draw in kind of the average, and then the average down here might be like back in this sort of zone, right? So you can see how it's a low volume area for the market to travel through. All right, so that's for the most part, I would say, the big pre-market indications that we want to take away from the profile, as well as the price action over here. I'm just going to bring it back down to a 15-minute time frame chart. I just also want to discuss if the market starts selling aggressively out of the gates. There's no real short indication for that. And the best short, in my estimation, not just a scalp for something that does this from here to here. That's not what I'm talking about for the best short. The best short, structurally speaking, would just be a big flush at some point. It could be opening range, fake break, whatever, and then a big flush into the afternoon. The better short here is a lower high underneath 4,200, right? And we know that because of the hourly time frame structure that we were just considering before we moved it on down to a 15 and then 30 to view the single prints and then the market profile, right? When we were looking at the hourly chart, we came to the conclusion that if the hourly chart specifically is going to remain in an uptrend, this area needs to hold. And therefore, we can also make the conclusion that if it breaks and we see a lower high underneath, got to think to yourself, are we going to see that higher time frame 4-hour pullback, which we know leads us to 4160. This is the better short range to be trading for, not this little scalpy thing here off of the value area high on, some sort of structure that does this like we were just talking about. All right, so hopefully everybody can see the difference between those two trades in terms of the short that is setting up. One is a scalp, one is looking for a little bit more movement out of our market. All right, with all of that covered, I think what we'll do is leave the ES on that note, and we'll jump on over into the NQ. Let's move along and take a look at the NQ. What's going on with our good friend, the NASDAQ? Taking a look at the NASDAQ, you might be like, whoa, laser light show, way too many things going on here. We'll talk about why all of that is relevant in just a moment. But let's move on up to the 4-hour time frame chart, and let's throw on the clean set so we can kind of see what's going on. Let's get rid of that example perhaps from way in the past. But anyways, 4-hour NQ, really important here. Remember that whenever markets start doing this parabolic thing, it doesn't mean that they have to stop immediately, but your risk reward is not favorable when you notice that something starts hockey sticking in the upward direction. Traditionally, a more sustainable trend has an arc that's, what would you call that? This one would be what? Concave? Concave versus convex going this way. So I guess it depends on what side you're looking at it from ultimately. But anyways, concave, convex, let's leave the geometry at home. For now, let's just note that, right, this has gone on a parabolic move. Now, it is breaking out of this range. It has broken and more than doubled that range. The pullback so far is above the top of that range double. It's very hard to say bearish things about the NQ. Please don't misinterpret what I'm saying as like, hey, it's probably not the best new money long up here. It does not mean that you should be going short. There's clearly relative strength out of the NQ, and that should be respected. That should certainly be respected. Let's move it on down. So now that we know that, right? I mean, it goes without saying. Obviously, this isn't a 4-hour uptrend. Obviously, it just produced a brand new 4-hour higher high. It can afford a pullback. This is one of the main points that we made in the weekly watch this video from Saturday night. Let's move down to an hourly chart and get a bit more granular in terms of where our higher lows are and the higher highs as well. So for the most part, like seeing a hold of this area on a pullback starts to look pretty ideal. That should be a gray bar when we throw back on our drawing set, but right around 13,450, just a little bit north of that, 13,460-ish, that general zone. And the reason that that's an area of interest, prior resistance, intraday, right? Intraday resistance, and then support here on the open from that Wednesday session. So that would be like a primary area from the hourly time frame chart that kind of wants to hold as a pullback zone. Rainbows and butterflies is, of course, just holding up closer to this area, prior pivot high, and where we rallied from on the Thursday session. So once again, hourly chart speaks for itself. Clearly in an uptrend, clearly an opportunity for a higher low. There's not much more to say other than that on the hourly and the 4-hour. Again, they kind of speak for themselves. But if we drop it down to a 15-minute chart, this is where we can start to see some of the issues with the market here, and that's where all these blue lines come in, and it just represents the absolutely thin structure that we're dealing with underneath us, right? There's not much support in the NQ as we start breaking, if we start breaking this area right here at 13,760. If that area fails, 13,750, 760, this general area, if this fails in the market, and don't get me wrong, we're not trading near it just yet. It's still quite a ways away, but if that were to fail, that really opens the door through single prints here. This is a little chunk of overlap, but after that, more single prints through here until we go back to more single prints, right? This is technically the closure of those A period single prints, but it's just the low of day, so it wasn't really worth marking off, right? So really not much underneath that. If we close that up, and let's grab another day here on the NQ, we'll go 3-day. You can see, right? Then you have these singles in here. So it's kind of like madness all over the place for the NQ chart with just lots of thin structure underneath us where I'm not sure, it doesn't make sense to me that you would try to be a new money long with all of this thin structure as in if the market's pulling back. I mean, the line in the sand has to be at 13,750. As we start approaching that, if you notice that there's a sharp reversal off of it, then fantastic. I'm not saying don't play that, but if we breach 750, basically 13,750, then that's where it's lookout below. It's lookout below through this entire range in here. I'm not sure that I would trust the NQ market as a long as we start breaking into this zone. So anything above pullbacks up here, trying to stay constructive, big higher lows on the 4-hour chart, big higher lows on the hourly chart. But anything underneath there gets really dangerous in my estimation just because of the thin structure. And you also know that we have a number of divergences playing out across the broad market as a whole. That was one of the main topics of the Saturday video was all of the divergences. And with all of those divergences, I think the market becomes extremely susceptible to liquidation break, right? Which is just longs with terrible trade location up here. If they don't see continuation on today's session and they all decide to close out at once, you get a really sharp move in the downward direction. Now, that sharp move is not necessarily new sellers hitting the tape. It's just longs who piled in on momentum saying, oh yeah, look at this. The market's going to go, 14K. It's got to go to the round figure. And then from there, it's going to 15 and so on and so forth. If those people get disappointed early on in this trading week, don't be surprised if we see something that looks like this, basically a vertical move in the downward direction. And then it starts to retrace, right? It's just shaking out the longs with bad location. Okay, so I think that combined with the thin structure is a recipe for disaster if we start trading underneath 13,750. I would want to be very, very cautious underneath that level, and hopefully you can see why, and hopefully you can see that the blue lines, although they are distracting, they serve a purpose, and they just remind us that, hey, something like interesting things happen down here. This is not just like fine and dandy, look for structural support. This is like, hey, bad things can happen here, basically. That's the gist of the NQ blue lines. Anyways, spike base is no longer really in play. We've obviously traded through that on the Friday session, so we'll remove that one, make it a little bit less of a laser light show. But asking the 3 questions of the NQ, just like we did the ES, of course, we're opening inside the previous day's range, a little bit more firmly towards the bottom as opposed to the ES, which is more central in the previous day's range. So we'll put a small, maybe a little bit of a down arrow on the end of that guy there. Question 1.5. Of course, value area question, where are we opening in relationship to it? Towards the low end of value area, but certainly still in the value area, which once again does serve as a P for patience indication. So very neutral out of the NQ as well. No gaps, no shock and awe here. If we ask question number 2, this is not 0.2, this is just 2. There we go. 2 is, of course, the overnight range. We're opening kind of towards the upper portion, but still centralized in the overnight range. Again, nothing really overwhelming to discern from that as an indication, neutral and balanced. Question number 3, last but not least, overnight inventory. Here's your prior day's settling price. And just like the ES, even the action underneath is basically a vertical uptrend, more time spent above here, a little bit of a move after neutralizing, but for the, maybe this one's a bit more mild, so perhaps something like only 60% net long versus the 75% in the ES. At the end of the day, question 1 and 1.5 are going to sort of guide us on the open. We're looking for an opening range. There are no single prints to contend with in the Friday range. There's no double distribution here and here like what we saw in the ES. So carry that forward that there's probably better structure to at least trade against, meaning that there's better places to put orders up against in the ES versus the NQ. The NQ is really not so clear with this, very, very stubborn downtrend happening on the Friday session. Right, so not all that clear NQ. I would say P for patience is a bigger objective out of the NQ on the open. You just want to let this thing go, let it find its range, let it break, let it confirm a new trend above, let it confirm a new trend below, or if it's a sharp move out of the open or a sharp move out of the open, we know how we get involved. The only responsible way is looking for perhaps VWAP confluence at a structural level, reasonable pullback, something that does this. Same thing with a descending VWAP for shorts, right? Something that does this, whatever. So that's the NQ. I would say that, again, the primary objective here is to exercise patience on the open. Please do not get suckered into any sharp move off of the open. There's no indication for it based on how we're opening in relationship to the Friday range. And as we saw on the 4-hour as well as the hourly charts, parabolic move, gone basically vertical, short squeeze, gamma squeeze, all of that stuff is in effect here. I'll try to take some screenshots of the option sizzle if we are getting more gamma squeeze on today's session or just throughout the week so we can talk about it in recap videos. It's pretty difficult to talk about something in theory if you don't have the screenshots over the weekend, right? So that was kind of unfortunate that I couldn't show you the gamma squeeze, but it's definitely in play. So I'll try to do that on today's session if we see it taking place. But anyways, NQ, I would say probably a hands-off type of trade, and I would look to the ES for better indications, just comparing the two side by side. Let's take a look at the Russell. What's going on with the rut here to round out our futures from a index perspective? Let's go 4-hour chart. There we are. Some more blue lines on the Russell. We'll get to those in just a moment. But overall, here is your major balance. We have yet to break this in the upward direction. The ES finally did it. The NQ was the first to do it. The Russell still feeling the pain of the banking crisis from back over here. If we get a bit more granular on the, well, actually, before we go hourly, I do want to point out, because this is significant, range, right? This kind of took place into the end of the week. So credit where credit is due. Again, I'll always say that the sellers did a good job here keeping prices underneath. That's 175.75 in the IWM. We'll see that in just a moment. But clearly the buyers reacted and tried to push prices back above that level here and in here. So is the bear case weakening for the Russell? I would say yes to some degree, because this did not produce a retracement to the bottom of the range, and we never actually got a breakdown of the bottom of the range. So I think it's fairly difficult to say the bears have an overwhelming edge. It will turn into something interesting if we get a look above and fail, but we're just not there yet, right? We really have to get acceptance underneath these lows in here. So let's now move to the hourly chart, get a bit more nuanced with that pattern, because once again, we can see this now as a head and shoulders, right? If we start breaking down underneath this neckline, much closer to 1773 in here, right? If that starts breaking down, that opens the door for the look above and fail we were just talking about on the 4-hour time frame chart. So that's going to be your key structure on today's session. Did I not adjust the Russell? I didn't adjust the Russell. What the heck, man? That's totally on me. I suppose I tapped out at the NQ this morning. I was too excited about putting this graphic up here on the left, where I just completely blanked on adjusting our Russell levels. So bear with me for just a brief moment as we do that. It shouldn't take any longer than, I don't know, a minute here to get our Russell levels adjusted to where they rightfully belong. Geez, got to put some respect on that prior high of day. What else do we have to do? We have to adjust our prior low of day and then grab the overnight low, and then we'll get our value areas. Wow, I can't believe, wow, whew, that's not great on my part. Anyways, where was the overnight low? Where's the overnight? There it is. Getting lost. Overnight low. There it is. We'll put that where it rightfully belongs. And then this is literally, I get a lot of folks who ask this question all the time. Like, how do I put in the value area low and high here on Thinkorswim? It's a very manual process, right? So I'm going to go and just open up the properties tab here in Thinkorswim. We're looking for value area low. We simply go on over to the Russell. It's a very manual process, right? And we look for value area low. It's just going to be where the highlight stops out of the Russell, and that's going to be here at 1771. So back on over to Thinkorswim, and we're just going to delete that 0.5, bump it forward a day, and we are golden. And then I said I would keep it under a minute, so I'm not even going to commentate on doing value area high. Just going to do it, and then we'll get back to the analysis here. 1788.80, 1788, almost unchanged, 0.8 here. Bumping it forward a day, and we are good to go. So just like that, we are back in business with the Russell, and you'll notice that the overnight high and value area high are now exactly the same. That is noteworthy, especially going back to the market profile. This is continuing with the analysis. This is no longer level markup, but just notice that we have single prints. We have single prints out of the Russell. We also have a set of single prints at the highs. Remember that this is not technically a spike. This is just liquidation break off the open. A spike must be produced in M period, or if you include the final 15-minute period, obviously LMNO, LMN, talking about N period. N period needs to produce the spike. So anyways, bad jokes about the alphabet, and no spikes, just single prints, and we're good to go. We're good to go, right? So we understand that there's thin structure here, and we can see this back over on the Thinkorswim platform in just a second on like a 30-minute chart. We'll talk about that, but I do just want to point out that for the most part, the Russell, excuse me, did produce a fairly nasty candle here. Large red-bodied bar, closed weak on the lows, point of control was weak as well. So I don't think that it's too far-fetched to look for. This is kind of that head and shoulders pattern we were just drawing in. If we start attempting these lows, based on what took place on Friday from a volume perspective and a commitment perspective with your point of control being weak down here, that, like, I don't think it's too far-fetched to look for the Russell head and shoulders, right? We can still very much so produce that right shoulder. All right, so let's go back on over to Thinkorswim here and talk about the indications from the 3 questions and kind of how and if this setup will pan out in the first place. So anyhow, what do we see here? Question number 1, inside the previous day's range, neutral, balanced. Question number 1.5, yes, inside the value area, neutral, balanced, P for patience, absolutely. Question number 2, opening towards the overnight high, away from the overnight low down here. That is a little bit more bullish than bearish, but once again, as we know, sets up decent risk reward here for the fade. That's going to build your right shoulder. I'm just going to put an RS here. That's not relative strength, that is right shoulder. It's going to build your right shoulder for the I, H, and S, inverted head and shoulders, all right? So be mindful of your overnight high value area high. Rejecting sort of this upper distribution strikes me as the way that that pattern will unfold. So being very mindful of this out of the Russell and noting the weakness from the distribution lower here. You know, bears have something going on if we push into this after the right shoulder is built. Obviously, that's a threat of the neckline breakdown. All right, so if this happens today, if this is kind of what unfolds for the Russell on today's session, just carry it forward as a big headwind for broad markets as a whole. It doesn't mean that the S&P has to come crashing down as a whole. It doesn't mean that it's got to go to, I don't know, 404, 406.15, the bottom of the range, right? It's not really what we're calling for. We're just saying that this will provide headwinds for the market if you're noticing this kind of dynamic unfold that we just pointed out. Right shoulder building here. Inverted head and shoulders in play. If you find yourself at the neckline, you're obviously not fishing for new money longs in other names, broad market names specifically, ESNQ, right? So anyhow, that's the Russell, and that's the main thing I wanted to discuss out of this particular pattern. It's just really all eyes on this if we find ourselves here off of a right shoulder. All right, breaking up and through this higher low above, you guys know the deal, right? What did we just discuss on the ES? If that takes place, then we're accepting in distribution number 1, then okay, finally, like there's some bullish activity here, because if we remember the hourly chart that we were just discussing, right, what was taking place? What was taking place? Remember, it's not a look above and fail until it is. It's not a head and shoulders. Did I say inverted head and shoulders? Man, just messing all sorts of things up on the Russell today. We're not talking about inverted head and shoulders. We're talking about regular head and shoulders. Wow, the Russell's throwing me for a doozy on this Monday morning. Maybe I need a stronger cup of coffee or something, but anyhow, we're dealing with a regular head and shoulders, and of course, there it is. It's not a head and shoulders until it breaks the neckline, right? It's not a look above and fail on this range until it gets back down underneath the neckline of that pattern, right? Hopefully, you can kind of see how all of this revolves around, 1770, 1773, that's the number we were talking about, a little bit higher than that. That's really where you want to keep your focus on the Russell, all right? So I'm going to move away from the Russell just because apparently it's offering nothing but bad mojo here on the morning analysis. So enough Russell. Let's move on over to our S&Ps from a cash ETF perspective. So spiders, what's going on? We talked about these levels, extensively in the weekly watch list update on Saturday, I would say. I'm not going to rehash all the same psychology as the ES. For Frank Vidal, we're talking about SPY right now, and we'll get into Apple as we move into the core list of companies here. So just hang tight. We'll get into those names in just a moment. Subconsciously, I think the Russell is going up. No, not at all. I think objectively the Russell will go down if it breaks the neckline, and the Russell will stay neutral if it is above the neckline. That's really all. That's really all there is to the Russell. I don't subconsciously think anything about the Russell. As a matter of fact, you guys know I just treat it as a market indicator. I don't actually trade the Russell. Anyhow, I do want to give a huge shout out to John Cardozo for the 5 and the coffee fund. WT as well, doubling it for John. Appreciate you. And Claudia Ray. Oh, sorry, not Claudia Ray, but Claudia. There it is. Claudia for the $4.99. Appreciate all three of you back to back to back to back in the chat. Thank you for the donations there, right into the coffee fund, and potentially that relocation fund is looking like it's going to be allocated sooner rather than later. So anyhow, I don't invest in anything but UVXY. I can't tell if you're trolling us, nobody here, but that is not an investment instrument. You can trade it, but that is not an instrument to invest in. Anyways, I'm going to just put a pause on the chat monitoring for a second, and we're going to dive into our ETF world here and see what's going on. If you haven't hit the thumbs up button already, please go ahead and do so now. It's a great way to support the stream. Obviously, Claudia, John Cardozo, and WT, they've gone above and beyond with their show of support for the stream. If you don't want to be like them, that's okay. I understand, but a thumbs up goes a long way. Anyhow, jumping into the spiders, the numbers, because once again, we've covered our psychology. 417.25 is your key support that is coming from the lows of Friday, as well as where this rejection was intraday on the Thursday session. So if we can remain above 417.25, I do believe that this is rainbows and butterflies consolidation for a bull flag into the future, and perhaps the squeeze continues in the upward direction. All right. So that is that. What else is going on here in the SPY? We just talked about this, right? 419. That is going to unlock your single prints and close up to here. That's going to bring you closer to 420 to get into the overhead distribution right yonder. All right. So those are the main points for the spiders. 417.25 line in the sand for today's session. If we're underneath it, look for the deeper pullback into 413. If we stay above that and just chop around in here, we know that we're still looking for opening range. All of the opening indications are very neutral, but a break of 419 in the upward direction can get you a move through these single prints right here into roughly just shy of 420. What's the actual number so I'm not misleading you here? 419.90. 419.90 would be the area I look for, okay? So basically 420. All right, continuing along, now that we understand the SPY and what's going on there, QQQ, what's going on with our Qs? Zooming in on the daily time frame chart. Once again, there is your parabolic type move. And what do we see over here? Same idea as what we talked about in the NQ. So again, just the key levels for you on today's session. 335.50 will be pretty paramount for today's session specifically, but anything deeper than 333.75 really becomes concerning for the rotation through the thin structure, right? We talked about all of those thin structure single prints on the NQ in terms of futures and market profile. That exists underneath 333.75. You can see here how there is some structure to play off of, so don't get me wrong, pullbacks can unfold on lower highs underneath 335.50, but the thin structure is only in play under 333.75. Okay, so that's really what you want to watch out for there. Technically speaking, 334, if you want to be, if you want to split hairs with me, 333.75 comes from a structural element off to the left, which is why I would also make the focus on that and not split that hair to 334. Anyhow, you get the gist. There's nothing overwhelmingly indicative about a trend move from the QQQ out of the previous day's range. We're just chopping around in that range. Nothing from the pre-market indications that's indicative of early morning trade. P for patience is paramount out of the QQQ. There's really not much to glean from this chart, basically. Once again, new money longs up here do make this market susceptible to liquidation break. Carry that forward as a dynamic, and I would just add on to that. I did not mention this as we were discussing it on the NQ, but if you start seeing a liquidation break, don't look at that and say with FOMO, oh, I should have been short. I missed the move, or I think I'm going to short this now that the liquidation break is unfolding. To me, that's not really a wise way to look at markets. You're asking to get hurt if you try to position early for a liquidation break. You're asking to get hurt if you try to capture some of the move from a liquidation break. I suppose if you're a scalper, it's not the worst idea in the world. But overall, just remember that we're still in a glaring uptrend out of the QQQ, right? Until this flips into a strong hourly downtrend, daily downtrend, that's where the better shorts come in. If you're just looking at liquidation break, don't look at those moves and say, oh, I should have been short. It's a terrible thing to say to yourself, and it's a terrible way to reinforce FOMO and reinforce bad habits. So just don't do that, okay? Nothing about this chart is overly indicative for a short. All right, once again, we can be responsible about shorts, a lower high underneath when and if it happens. Okay, something's on the table there, but just shorting up here because you believe the market needs to pull back aggressively, no. Don't do that. Please do not do that. All right. So anyhow, IWM, Russell 2000 small caps, what's going on in small cap land? I've even got the fibs over here from the weekend video. Shows you how much prep I did after the analysis was complete. Go enjoy your weekends, right? Enjoy your weekends. Anyhow, IWM, 175.75, that's the number. We just discussed the head and shoulders pattern out of the Russell futures. Again, if we are to find a lower high here at the overnight high, again, this is kind of the closure of the single prints as well. This is where it should be, in theory, happening, 177. If we reject here off the open and find ourselves at the Friday, Thursday lows, 175.75, we know that we're dealing with the head and shoulders neckline, and we can perhaps break on down from there. So 175.75, very, very simple level to watch in the IWM for a directional kind of indication. As we're pushing away, obviously, it helps the bull case, or at least neutral, right? You wouldn't want to be short if the IWM is pushing away from that. And then obviously underneath flips the script, and yes, shorts will become more favorable. All right, so that's the IWM in a nutshell. We've got 9:11 on the clock, 9:12 coming up. Sometimes, it feels wrong saying that number. Not that there's anything wrong with it. Of course, we can remember, but sometimes it just feels odd saying it. Anyhow, that's neither here nor there. IWM's been giving us bad mojo all morning, so we're just going to move along and jump into the Apple to kick off Apple to kick off our core list of companies. What's going on here in Apple? We saw the downgrade from Loop Capital on the iPhone production numbers. Big pullback here. I'm honestly surprised that the broad market is being so resilient and not gapping down with Apple. Remember that Apple is the broad market. The broad market is Apple. If you don't like Macintosh, then I suppose a Johnny Appleseed will do you. But for the most part, again, like the fact that the spiders are holding up there is real interesting to me, considering that this gap down is so severe. Now, I get a ton of downgrade, but for the most part, it's just, again, 1 + 1 is not making 2 for me this morning. Anyways, we're underneath 174. So let's look at this chart objectively, regardless of the relationship and correlation with the S&Ps. I also want to give a huge shout out to VR for the 5 in the chat. Appreciate you. But back to Apple, back under 174 is an issue, and you can see why on the daily time frame chart. This should be quite clear, right? In a picture-perfect world, this was looking for support on a break and retest over 174. The fact that we're gapping down on a downgrade under 174 now opens possibilities for a lower high underneath, keeping us firmly supplanted in this range. And, what's the idea, right? It's look above and fail. Target the bottom end of the range, start looking for the gap to close. So this is really not, this is not all that encouraging for markets here. Apple under 174. So keep a close eye on that level, specifically as we move forward into today's range. Now, I will say it's, we can't just throw away gap rules. Gap rules are on the table here for Apple. So if we open here, technically the overnight low is here. Does the risk reward make sense for a gap fill trade to unfold? Let's just draw in some boxes here for a better visual. I mean, it's not the worst trade in the world, especially if you see a pullback first that's shallow and doesn't even test the overnight low. So we don't have gap rules in the broad market, but certainly gap rules in Apple. So if we fail the overnight low, trade long through the opening print looking to close that gap, once again, the concern is that we're dealing with 174 potentially acting as resistance first instead of getting the closure all the way to the prior low of day, which is a full dollar. A full delta in the upward direction. So that's noteworthy here. If you are going to try to trade Apple for the gap structure, there's really two things that my mind can see here being reasonable. Number one is a mild pullback that then moves through the opening print and offers good risk reward from here, literally through the open, stop low of day, target 174. If you get this risk reward, then I suppose that's okay. Just look at the average 30-minute first bar of Apple. You really think that that's going to unfold so cleanly like that? It wouldn't be my first thought. But anyways, that would be number one if you're trying to trade this gap. Number two situation to trade the gap would just be a failure of the overnight low, right? Long, not necessarily long through this, but let's say that the market moves through the opening print, pullback here, and then a higher low above 174 is the next interesting trade. Why do I say that, right? Hopefully we can see why. This represents the gap range over 174. If you get, let's just pretend whatever happens down here happens, and then you get, let's make that a little bit cleaner at least. So whatever happens here does. If you get this, right, at least you can position with a stop here, entrance on the pullback here, and you can target up here. That risk reward is far superior. All right, so I would be thinking about that trade around 174 as opposed to anything else. Now, we know that if Apple stuffs off of 174, you could also look for a short trade to develop here, keeping us in the range. Okay, so Apple will be a top watch just based on the nature of this gap, offering up a number of scenarios to trade against, right? So that's where my head's at with Apple. Those are the situations I would be prepared for. Next up is Netflix, just cooling off after the mega rally from the Thursday session. Sideways Friday, sideways pre-market, no big indications. Clearly a flush point here, 364.75 if it breaks. There's virtually no support through here, but just be mindful that even though there's no support, you're shorting into huge momentum. So is that my first thought? Probably not. Probably not. Wouldn't be my first choice to short the strongest name on the board. So you do you, but 364.75 is the number. Let's continue along and take a look at Tesla. Tesla 180, 181 is interesting here just on the pre-market sort of interactions, looking for a break of that level. And we kind of continue here into the next overhead resistance at 188.50. This is getting a bit, I don't want to call it extended because remember that the markets can always remain extended in either direction longer than you think they can. So it just starts to feel a little bit chasey here, as if, you know, we've produced a brand new higher high. We're coming from the last higher low. It feels like it's ready for a pullback. I don't want to, like, this is where I would say, who is saying that I subconsciously want the Russell to do something? I'm already forgetting. But, you know, I would say with Tesla, this is probably a situation where I'm trying my best not to project my subconscious desires onto what's happening here. I would prefer to see Tesla pull back and give us a better entry over the top of the range, but it very well could just continue. So I do think that Tesla is not a short. But looking for a long here, I think that you're going to want to wait for an intraday setup that offers tight risk reward, be it a pullback over VWAP. Something that offers a clear stop loss will be required if we're chasing Tesla longs here up at this level. All right, so I would leave it off at that. 180.125 is the number. Continuation above 188.50 is the next big resistance. How you get involved, that's kind of that's the $1 million question. That's the $1 million question. So it's not a short, but it's not an easy long there. Next up is Google. This is at least easier to identify short for the pullback because of the daily structure that was found here. Obviously, big inverted hammer. We're not opening near these lows, but intraday, if we see a flush first and something that does this, if we get descending triangle, if we get like a lower high here, right? If you can position with tight risk reward, the pullback trade does make sense out of Google. We're flushing these lows, but just like Netflix, also consider that this is one of the strongest names on the board. The only reason that this to me makes more sense is because of the big display, so to speak, of the sellers on the Friday upper wick. With that display of sellers, I'm at least, the sellers made themselves known in Google on Friday is basically what we're getting at. So if that takes place here, I think this is a bit more tradable than the Netflix move, right? So anyhow, that's Google. It's all going to hinge upon 122.15. Certainly would not be chasing longs in this upper wick. I mean, what does this tell us? Again, sellers getting active. Don't want to be a new money long looking to push my luck through that area. It's like almost like Tesla, right? You don't want to project too much, but it feels like it's time for a pullback. It feels like it's time to cool off. Whether or not it produces a downside move or a sideways move is kind of like, that's besides the point. But it feels like it's ready to take a breather. Anyhow, Metaverse, what's going on with Zuckerberg's fantasy land? This trade looks good to me. Watching for pullbacks to hold 241. We saw that headline in the morning session about the fine, the 1.3 billion. Doesn't really look to be too badly affected. Price action wise. So pullbacks that hold, as long as we're above 241, looking for this to build out flag and then break eventually into the overhead gap. Remember, you don't have to be the first one in the door. There's like 40 plus points of range overhead to be trading for. So patience out of Meta, but eventually looking for a better long trade into that overhead gap. Nvidia is up next. 3-bar plays all over the marketplace, but too many eyes on them probably causes them to fail. That's something we tweeted about over the weekend. This is already opening towards the lower portion of the Friday inside bar, so I would just be cautious underneath Friday's low produces more of a retracement. All right, so just watch out for that in NVIDIA. Once again, very difficult to short these things. I would say that Google has better structure to be shorting against. Google is probably the primary candidate for any pullback trade to unfold. Apple, we know we're interested in that gap overhead, right? So those are some just high-level thoughts as we wind down the stream here and finish up the core list of companies. Microsoft, holding up okay. Not bad considering Apple is gapping down, considering Meta is opening lower, right, on some of those headlines. Microsoft's hanging in there. So for the most part, nothing crazy to talk about here other than just a 2-day high break. Gets interesting for continuation. It's probably stronger than the inside bar play on NVIDIA, obviously, with a green bar on Friday. So this may be a long contender, but again, Apple is probably the better one. Just structurally, it seems to make more sense. We're not so far extended from the range, right? Last but not least, the mini beast, we've got Amazon. This, perhaps, as we discussed in the weekend video, is the best short to be watching because of 116.85, right? This technically is a double top neckline here, and we are opening underneath it. So continued lower highs under 116.85, a double top is already in play here, and perhaps it's even cleaner to see if I just turn off those extended hours and grab you a couple more days. You can see how we get touch 1, touch 2, there's your neckline, right? So call it an M, call it whatever you want, but lower highs underneath 116.85. Very interesting in Amazon for deeper pullback to unfold. Obviously helpful if the broad market is pulling back as a whole as well. All right, and if we're above, I would just chalk it up to neutrality in here. I wouldn't chase it. Again, looking at this move, I would wait for consolidation and then maybe a break over the equal highs, 118.50, breaking that double top. That might get interesting, but you have resistance at 119, so your overhead room to run is running out, so to speak, all right? So a couple of ideas to be watching for this morning. Again, ES, probably more of a watch than the NQ. Apple, a top watch with the gap. Google, a top watch with the Friday inverted hammer. Amazon, a top watch with the double top and the neckline already being broken here, lower highs underneath on the table. So let's go back over to the ES, make sure we didn't miss anything here as we wind down the stream. I'll check back in on the chat and see how we're doing over there, make sure everybody's A-okay for the open. Nothing has really changed out of the ES, pulling back a little bit off of that overnight high that we were pushing into as we were just discussing that a little while ago. So it's still going to be the level, and that's still going to be your interaction point, waiting for P for patience on the open. If we break it, great, 5-point scalp to get to that value area high, looking for a pullback, higher low here, right? If I had to rank order things that I was watching for, this is kind of like ideally what unfolds. That's picture perfect. Rainbows is a terrible rainbow. Rainbows, and I'm not even going to try to draw a butterfly. I guess I'll actually try. Let's do something like this. That's not too bad. Some antennas there. So anyways, that's rainbows and butterflies. Obviously not so great would be a opening range break here and lower high underneath 4,200, right? That's your downside. All right, so let's just keep the poll very simple. We'll give a number 1 and a number 2 today. If you're bullish, drop us a number 1, looking for the rainbows and butterflies. If you're a bit more bearish, drop us a number 2 in the chat, and that's the lower high underneath 4,200. All right, we'll leave off on that poll. All right, checking in. Yeah, Shanks a million, it was you just playing around. All good, all good. What else? Jumping up. What's going on? Starlight, nice to see you. Brian Scott, good morning. Raz says, do liquidation breaks happen normally at a certain time of the trading day? I would say that a liquidation break is more apt to happen when there are fewer people at the screen. So, it's not a hard and fast rule. So don't think about this and say, oh, a liquidation break has to happen after lunchtime. But I would say after 11:30 closes, usually that's when the more, classic liquidation breaks start to take place. I wouldn't call this a liquidation break from Friday because we did not see a 100% retracement. But notice the time frame, right? It's after the morning session. That's kind of when these things are more prone to happen as your traders get out of the markets, right? It's the medium-term positional traders who all close out with bad location. Those are the people who cause the liquidation break. All right. You're getting served Fender ads now from our guitar discussion in the pre-market. Anyways, that's funny. Mr. Prayer is in the chat, of course, telling us that the market's going to crash. We have a friendly back and forth on that all the time. Anyhow, the rug pull will be legendary. Yeah, when and if it does happen, it will be legendary, that's for sure. But I just don't know that we're there yet. What else? All right, if I just look at the results for our poll here, what do we see? A couple of ones, lots of twos though. I would say it's actually fairly balanced. Pretty balanced indication out of the poll results this morning. And we've got Siege gifting a membership. Who's the lucky winner? Speedboat. Enjoy your membership from Siege there. So shout out to Siege for doing that. What else? The Bulls are back in town. Pablo, nice to see you. All right, I think that's going to wrap it up for this morning's stream. Black Diamond Off Grid, nice to see you. One thing I do want to look at is UVXY because I think, who was it? I don't even remember the name. But someone was saying, oh, the only thing I invest in is UVXY. I mean, if you want to invest in this, then go ahead. You can trade it. Again, maybe there's just a little miscommunication with language. If you want to trade this, by all means, you can trade the UVXY. But investing in the UVXY, probably not a good idea. It's a leveraged volatility ETF, not something you want to invest in. Anyhow, that's going to do it. Just, the reason I bring this up is not to bring anyone down. It's just to prevent misinformation, right? I don't want someone to read what that person said, go out and buy UVXY because they think it's on sale at $3 a share, when in reality, it's a perishing ETF, okay? Anyhow, that's all. That is all. We're going to end it on that. Thanks for tuning in, everybody. Hopefully you had a good time in the stream this morning. Hopefully we kicked off the beginning of your trading week on a good note. Come join us in the Discord. We hang out there. We just send some trading ideas if you want to hang out and discuss ideas, even things non-market related with other traders. Come join us. It's completely free. It's linked down below in the description. All right? That's truly going to do it. I wish everybody a green trading day, and I will see you in the next one.